The most common trading mistakes are trading in too much size, doubling up a losing position. That's a classic. If you're doing an arbitrage trade, or not exactly an arbitrage, but if you're long of the FTSE and short of the DAX, legging out one side of a trade without taking the other side out. So, you're long the DAX, short the FTSE, the market falls. So you've got a nice big profit in the FTSE, a big loss in the DAX. A lot of clients, well, let's take the profit. Let's take the profit in the FTSE. So they close the FTSE and leave the DAX there. So now they've got an open position, big loss on it, and then it keeps going. So legging out of one side of a position is a classic mistake. But the really big one is doubling up a losing position. So you're long and the FTSE, it's falling. You go, I'll put some more. I'll increase the position. The only time you buy more of a position is when it's going in your favour. And then there are minor ones like putting more up. You've got a position, it's losing money. You're coming close to your stop, and you move your stop further away. Classic mistake. If you've got a stop, stick to it. Don't move it. The only time you should move a stop is when you move it closer. Never move it further away. It's very difficult for people to speculative trade on things like AIM listed stocks because the spread is so huge. You're talking 10% on those shares, on 10%. So the share has got to go up 10% just to beat the market spread. It's not the spread betting company spread, that's the market spread. So, you might, everyone says, it's 30.33. The price of the share is 30p on the bid, 33 on the offer. Okay, fine. So the company's worth £50 million. But for the share price to go to 34 to 37, effectively the company's got to have moved from being worth 50 million to 55 million or 56 million. So it's actually got to go up 10% to beat the spread. So it's very rare for people who to speculatively trade on illiquid markets to make money. That doesn't mean that you can't. If you have some information, or often illiquid markets can be highly volatile. So sometimes you can get it right, but the consequence of getting it wrong generally are worse than the profits of getting it right, because the spread's so violent.